Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Before we get into what happened in the markets today, I just want to take this opportunity to say, please subscribe to this YouTube channel if you haven't already. We appreciate all our subscribers. We appreciate all of our clients and all of the advisors that we're working with. But this is a way that you can get some of our insights for absolutely nothing, for free. So click subscribe. We really appreciate it. And now let's get into what happened in ag markets today. A lot of green on the board today, which pleased a lot of people. We're going to talk a little bit about the pre-Thanksgiving trade today, but let's go through these here. Canola was up $3.90 to 648.10. Minneapolis wheat was up almost a nickel to 581. These are on the March. Kansas was 575 or 5.75 higher at 528 and a quarter. Chicago was 4.5 higher at 539 and a quarter. Soybeans were up 1.5 cents today to 11.24 and three quarters. Corn was up 1.5 cents today at 438 and a quarter. Soybean oil was up 12 points to 50.65 cents per pound. Canadian dollar gained 6 points at the time of this recording at 70.95 per US dollar. Now, live cattle were basically even. Feeder cattle just a little bit higher, $3.30 a hundredweight. All right, let's talk about wheat here for a moment, as the three wheat complexes were pretty much the highest gains on the board today, even though they were hovering around 1% or even a little bit less than 1%. As you can see here, the Kansas market here was one of the, I guess, better performing of the wheat markets. It kind of made up for the losses over the past three sessions. So Friday, we saw a little bit of gains after some midweek weakness last week. And it's kind of been bouncing around even since then. Today's gains, kind of made up for yesterday's losses, things like that. I think we're seeing flat trade this week as a large result of the U.S. Thanksgiving. There might just be some position rebalancing, but earlier we kind of talked about how there could be high volatility as positioning was being done before Thanksgiving, or it could be pretty flat. I think we are seeing the latter of those this week, at least thus far. Although it's only Tuesday. We got one more trading day before Thanksgiving. Here's the Chicago wheat again. The last four sessions up until today had seen losses. Today's losses or today's gains don't even really make up for much of those at this point in time. It's kind of sideways since yesterday. Minneapolis, we did see a little bit more, although we saw the same kind of gains nominally, like 4 3/4, or call it a nickel. It does look a little bit better on the chart, but as you can see, this market has been very sideways for quite some time now. As far as what's going on with the winter wheat crop, Successful Farming put out a good article. I would recommend reading it if you are a follower of Successful Farming. There's lots of data in here and lots of charts that were really nice. I'm not going to put them up here, but feel free to go check out that article. In the last crop progress report during of this growing season, the USDA on Monday detailed the progress and condition of the winter wheat crop. Only a small percentage of the crop is not yet planted, and 87% of it is out of the ground. Plus, overall crop conditions improved compared to a week ago. So things are going pretty well. We got some rains in the HRW areas as well, with some more forecast. I did get a question today from one of the advisors that we work with about U.S. winter wheat planted acres. Of course, the USDA hasn't put anything out yet. Specifically, I think the market is calling for even to about 2% losses. So what I did here was I put in about a 1% change from last year on the lower side. So about 32.8 million acres. We have seen lower in the last decade or so. Wheat planted acres are leveling off. Obviously, there's pretty large carryouts that have been happening in the US. Most of the customers that are looking for wheat kind of use the US high-priced island as a bit of a relief valve if they can't get it from somewhere else. So that's why we continue to deal with higher than normal ending stocks. Let's move on to soybeans here. Very much similar pattern here. After the gains that we saw all the way through October to the middle of November, it's kind of leveled off a little bit. We saw a little bit of losses last week, and these last three trading sessions, similar to the wheat market, are just kind of sideways. Canola is doing something similar here. Although, just like beans, canola is higher over the last couple of months, despite the slow exports in Canada. Now, you could say that the harvest pressure is coming off. which is probably true. There's good crush demand though, and that actually today there was a release from Statistics Canada that showed the monthly canola crush, and there actually was 16,890 or so metric ton more crushed in October than there was last year. We are on pace to beat last year's crush number. That doesn't surprise me at all, as we have increased capacity since last year. Although, from what I understand, the capacity coming on near Regina is being delayed further and further and further down the calendar. So I don't know when that's going to come into play. It could be even, late in Q2 at this pace of change. So, yeah, I do still think that the crush program in Canada is going to be higher than last year. It may not just be as high as we originally thought it would have been, 3 or 4 months ago. Um, Kind of keeping on the vegetable oil track here, soybean oil. This is I guess, a bias by Bank of America, which did its, it maintained a bearish outlook on wheat and soybean markets, but also projected strong bullish trajectory for soybean oil as it entered 2026. Soybean oil will, according to them, soybean oil will enter 2026 with strong demand prospects, constrained supply, and consequently a bullish outlook. That's according to the bank's analysis. The report did caution that upside potential for soybean oil remains contingent on pending regulatory frameworks that could impact the market. So we're still looking for more clean fuel regulations in the US in order to kind of make that prediction come true. But to kind of juxtapose that with another bit of news here, China's exports of soybean oil, particularly to India, have been rising sharply as weak domestic demand, so demand in China, coincides with a lot of imports of soybeans from South America and more recently even from the U.S. China shipped a record 70,877 tons of soybean oil in October, according to the customs data, most of which went to India. Exports in the first 10 months of the year reached 329,000 tons, almost triple what they um, what they were for all of 2024. China has long viewed its dependence on foreign soybeans as a vulnerability in a world where geopolitics and viruses can quickly disrupt commodity flows. However, the robust imports from South America are hitting a tepid local economy and are forcing Chinese soy oil producers to seek new markets. It's another example of flagging consumption in China, resulting in surplus soybean oil with excess flooding into global markets. In this case, it's a development which is welcome to India as it lowers price of food there. But and India is the world's largest importer of soybean oil. So even though China is importing a lot of soybeans, and they've promised to import a lot of soybeans from the U.S., they still have a glut of the stuff domestically, and they're actually trying to get rid of the product there. This can kind of be seen in the soy oil market, which has kind of been flagging around even so far. So Bank of America's prediction that this is going to be a bullish market, I think, heavily weighs on the regulatory side, which they actually flagged as a risk. So again, the tale of two cities, so to speak, in the soybean oil market, which of course has an impact on canola. Corn didn't do much today. We did see gains today, but nothing to write home about, and nothing really to make up for losses seen since the middle of November. Live cattle, we went into depth on this yesterday after the Tyson plant closures and scale back of some of the other plants happened yesterday. Live cattle, I mean, we could have done another limit day yesterday as limits were expanded. We did see some pretty heavy losses as well, touching, even 205, 100 weight on the February live cattle. We settled out at about 207. So we still continued to see decline in prices today. Feeder cattle, same kind of story, where we did test the $300 level, but closed just above that. All right, you can probably see today that I'm wearing my fan of the Vikings hat. Being a fan of the Vikings is very difficult. I know they don't have any games on Thanksgiving Day. I think it's Sunday. Their next games are where they take on the Seahawks. Now, I have no visions of major grandeur on the Vikings side there. Vikings are 4-7. Seahawks are 8-3. But, miracles can happen and a Vikings fan can dream, I guess. That's all we have for you today. Thank you for joining us. We hope you have a great day, and we'll see you again tomorrow.